I got in Paris last night, and today I want to share with you my setup that I use for trading stocks, Forex, and CFDs. This works across many markets. I've been working on this for a couple of years by this point, and we'll go step by step to the charts. I'll show you some examples. I'll show you how to differentiate from Forex and stocks, a few things you got to tweak and change, and this will give you a good setup to look at and to use when you go in the market. And before we get to the chart here, I want to mention that I'm a swing trader primarily. I trade daily charts and weekly charts. These are much higher time frames than other people trade sometimes. I like these time frames because I have a lot more flexibility. I look at the chart once a day, then I'm pretty much done for the whole day, or even the weekly chart is like once a week. I look at the chart once a week, then I'm done for the whole week. And I can just go and enjoy the cities that I'm in. If I'm in Paris, we'll go out later outside. And it just gives you a lot of freedom. So compared to someone who's day trading in the markets, maybe trading 2 or 3 hours a day, I'm doing maybe 15 minutes per day maximum. Let me know in the comment section below, are you a day trader, or are you more a swing trader, or something in between? Let me know in the comment section below. I want to hear your thoughts, and I want to kind of get a feel for what you trade. So let me know in the comment sections, and I'll be able to understand where you're at and how I can best help here on YouTube. Okay, so the one tool I'm using for my trading, this is the only one indicator I use. It's called the Hull Moving Average. What I did is I built my own, so I kind of made my own version of it that is allowing me to see the setups on the charts. If I just turn it off over here, you'll see everything will go off. And if I turn it on, I have all the setups, all the different parameters, and everything is there. At the bottom here is also a hull on a different time period. This is going to be based on a much longer time frame. You can see this one is kind of more smooth, from green to red to green to red to green to red. And it's kind of giving us a better idea of the long-term trend in the market. I use this thing on both time frames exactly the same. And you'll see I also have these dots over here that kind of give me partial exit points. So if I were to take a trade, one of the setups I have is over here. We have a little green candlestick over here, which is a change from the hull from red to green. Big trend here is up, so it's green. And we're going to take an entry right there. So I'm going to put this in the chart. We take an entry here, let's say at the close, and then we'll let price move in our favor. Now, one thing I've really tried to do over the past few years and try to get better at is having more flexible exits. I don't want to always target 2-to-1 or 1-to-1. These targets are good, but they don't give you an idea of like how far the market will go, or whether the market is like pushing really fast or kind of dying out and not moving at all. So what I've done is over the past 6 months or so, I've built these custom exit points, which are these dots in the chart. You can see we have a lot of them here. We have 1, 2, 3, 4, 5, 6, and 7. We can have other ones in the past also. These will be the exits for a sell trade. These are of course exits for a buy trade. They're at the top of the candlestick. And here we have other exits for sell trades. Now, I want to be clear, these are partial exit. They're not full exit, which means that you don't take your trade off at these points. You can also wait for 1, 2, or 3 dots if you want to. In my case, what I do is I try to go for at least a fixed relative risk, like a 1-to-1. And if I reach that and have a dot, then I'll take out half of my trade. So this example over here, if we were to enter at the close of this candlestick, put a stop loss even somewhere below here, try to get to 1-to-1. You can see 1-to-1 over here, and then we have a dot. So we could get out in theory at this candlestick right here at the close. So that's our first trade close, first target. Now I know here is not a fully optimized exit, but we can never be 100% accurate in the market and be always catching the top. So I'm cool with that. Then I keep the other half of my trade for a further take profit. And usually it's going to be when the hull turns red. This will be my full exit. Or if we have more dots on the way, I'll take some partial profits on the way. Notice here we also have this setup over here, which is the setup I used to trade before. I still traded the same, but I also use it as exit. This is a Bollinger Band reversal setup. So this gives me an idea of like having the Bollinger Band over here, price breaking the Bollinger Band, coming back within. It's all coded for me, so it's all showing up on the chart without this tool. But basically it's price breaking up the Bollinger Band, coming back within. Strong reversal level and strong candlestick also showing a reversal here. It's a good idea to take half the trade off or reduce the size or whatever you want to do here. It's a good idea to do it. So what I do is this is also a partial exit for me. So I will take one half over here of the trade, keep another one for over here. Now this level I can close another half of the trade. This level here I can close another half of the trade, and then I keep the other half until the hull turns red over here. So when the hull turns red on that time frame, then I know I should get out of the trade completely because price is about to reverse or started to reverse already. I know there's a small delay here. It won't pick the top all the time, but it can get you out a good exit and really get out when the market really reverses. If this lasted for multiple years, then we'll be in the trade for multiple years. If it lasts for a couple of months, we'll be in the trade for a couple of months. And we get out when the market's not conducive for or trading anymore. So you kind of see how this works. We could do the same thing on the daily chart. I had a really good trade I shared about before on Air Canada, which I got out a few weeks back. You can see over here. It's been going on for a long time. I did have a push here on the upside, then downside over here. Traded this on both the daily chart and weekly charts, added to it on both time frames. And I really was able to scale into it. So you can see we have 1, 2, 3, and 4 chances to scale in. Eventually we got out of this in profit, in a very big profit. But overall, that was a really big target in this one. So kind of cool how it played out. Now there's a small difference if you trade this in stock versus Forex. And the main difference is with how you deal with stop losses. In stocks, there's a lot more gaps and there's a lot more kind of big push in momentum. Things can change really fast. So I like to actually want to take a trade. I like to give myself room for the trade to unfold. Right? So if I were to go short over here, we have a nice setup. This is one of the setup we have. So the first one is when we change the whole color. The other one is when we have a pullback. But if I were to go short over here at this candlestick, in stocks, I don't want to place my stop loss behind just above the high. I want to give it some room. So I'll look at not the previous high before, but the one before that. So over here. So I actually give myself a lot of room for stop losses in stocks. And then of course the target would be 1-to-1 or whatever, based on the market. And we'll get out when price reverses or when we have a dot. In this case, we have the setup over here with the Bongsburn reversal. This will give us a slightly bad exit, but that's totally fine. And the key thing is you want to give it some room to go. You want to have enough room for price to pull back up, get back down, and continue its way in the normal direction you're expecting. If the hull turns back to green before my stop loss is hit, I'll also get out. And I'll keep trades that are with the green hull if I sell, or with the red hull if I buy. I want to get out when they change color or change direction. In Forex, it's very similar. You don't want to hold when the hull is the opposite color. But at the same time, you can be a lot more tight with your stop losses. You can really be a bit more close to price. So we had it set up here in the past. Now this setup on EuroCAD, I might go and trade it right away. Right, so I'll go and do a long position, enter somewhere here. Stop loss will be right below the low of the candle, right there. This trade would have been a break even probably, but it also means that it's really easy to go in the market and catch these small targets on the Forex because there's less gaps, there's less movements, things are much more precise, and it just makes a lot more sense to go that way. Bitcoin is also one where you can be a bit more aggressive with your stop losses, even though it moves a lot. The direction tends to be very clear. There's no big gaps on this. And I tend to be a lot more aggressive with the stop losses. Now, there's one key thing you want to be careful about here. You don't take all these setups. There's a really key rule I haven't shared yet, and it's kind of important to mention it here. It's the fact that this is well traded in trending market. You focus on this on the trending market. So when price goes up and up and up, makes pullbacks, this works really well. You can also trade this on the downside, the same thing. But you don't want to trade this when it's sideways. This is really not made for sideways market. It's made for trends. Sideways market, I have other strategies I've covered on the channel here. Check out this video here in the corner where I cover my strategies for the sideways market. What you want to do here is really be careful about the support resistance area. So if you are going to see on this chart, this is USHPY, it's a very sideways pair, quite a lot. You can see price comes back down to this level, 140, comes back up, comes back down to 140. Now we did have a nice setup over here, but do you really want to sell when price is getting so close to that support once again? Right? Yes, we have a trend, it's kind of going on, but we see price bounce back multiple times here in the past, and it's so close that we might not get any profit out of this. So for me, I prefer to skip it. I don't take these trades. I only take them when it's really trending well and there's no support in sight. So you have to be careful with the sideways market. It's very important to not trade against these levels. You can just kind of scroll back on the chart and see them. I don't do any fancy analysis on this. I don't look at too much behind this, but I just kind of look at the highs and the lows, and if it comes back to be sideways for a while, comes back at the low or the high, then I won't take any trades near these levels. So if you want to go more advanced on this, I've prepared a whole training. It's all based on this indicator I use, the whole moving average, how to look at things, how to really pick the right entries, going more in depth on what we talk about here today in this video. If you want to see how it's done and how I trade it, check out the first link below. I'll give you a lot more examples and go through the charts with you and kind of guide you through some trades, a bit more in depth. So check out the first link below. It's going to be going through that training for the whole. It's 100% free. Hopefully you get some value out of this, and make sure you subscribe if you haven't done yet. We publish these videos 3 times a week, and I'll catch you back here in the next video pretty soon. Ciao.